are bullish on leisure travel. I just don't think they're bullish enough, right? So, leisure is really lifting, RevPAR, getting closer to 2019 levels. But if you want to play the hotels because of that, why not just go right to something that is almost 100% leisure? And just to caution people about getting too excited about RevPAR hitting 2019 levels. I mean, we've also had inflation, right? So you're 3 years removed from 2019, and costs have got up higher. So in real terms, we're not even close to 2019 levels of RevPAR, but the path there is heavily driven by leisure at this point.
And it's not about the levels; it's about the rate of change, Todd. So I mean, that's I think how many corporates? It's obviously not just your sector. All the executives talk about 2019 levels, but that's not what we care about. That's just like a talking point, right? It's a reference point. It's a point in time that you're trying to get back to, or they are. But it's definitely not the rate of change of what things will do throughout a deepening of quad 4 in Q2.
Yeah, there's two things to look at. There's kind of like the rate of change, because you're coming off such a low base, right, for business travel. But group is coming off of an even lower base, and we're actually positive on group, more so than business transient. But it's really about the rate of change and relative to expectations, because we look at, and we our last 2 decks we talked about this. But if you look at what the street and investors seem to be forecasting for RevPAR growth. I think you get a good bump, maybe because of leisure in the second and third quarter. But really, if you look at the 2023, people are way too aggressive, and it's all driven by expectations of business travel, getting back to normal. And we just don't see it. There's way too many hurdles. This ESG thing is just another nail in the coffin for business travel. And, the management teams, I think, are doing a disservice to the investors because they're setting expectations high. I mean, they say this every quarter, business travel, it's coming back. Well, yeah, it's got to come back, but are you going to get to levels that actually, move the needle more than leisure? And that's a bad mix for the most of the hotel complex. And that's our big issue.
If you're a hotel executive, first of all, you're paid to have a positive outlook. If you have Powell's outlook on growth, you're right out to lunch. That's the consensus. Actually, it's even more. Yesterday's projections by the Fed were more consensus than most, even on Wall Street, which is interesting. But again, if that's your outlook, and even if it wasn't, you were paid to be bullish. That's the mismatch on expectations versus what we're talking about sequentially GDP going from 7 to 0, as we head into quad 4. So that's I think that's the most obvious thing. By the time and throughout that period as it's happening, then all the CFOs in your space are going to have to recalibrate their business travel. And again, these are GDP linked businesses. This is not that complicated.
Yeah. They want this business travel to come back, and it's going to come back to some extent. But then if it comes back, they have to start elevating their service levels, because business travelers aren't going to accept the kind of service that's at a lot of these hotels, right? The brand standards have been relaxed. And so you're going to get either a big cost, hit, or business travel is just not going to materialize, and those headline RevPAR numbers are going to be disappointing. And then, so quad 4 is going to pressure that, incremental decision to travel for business. And, that, if you look at the stocks, right, the C Corps, the high-end C Corps do not do well in a quad 4 environment. They're they might be the worst performing subsector of gaming, lodging, and leisure. And then if you look at Marriott does even worse in quad 4. So this is not a good environment for Marriott.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.